The headlines in early 2026 were jubilant. You saw them: trade peace at last. Washington and Beijing sign historic truce. The markets rallied, the S&P 500 hit record highs, and for a moment, it felt like the cold winds of the tech war had finally stopped blowing. The deal, brokered after months of tense negotiations in Geneva, seemed like a win. China agreed to suspend its export restrictions on gallium, germanium, and critical rare earth processing technologies. In exchange, the US paused the implementation of a new, draconian tier of semiconductor tariffs. It looks like stability. It feels like a return to the globalization era of the early 2000s. But I am here to tell you that this celebration is premature. In fact, it is dangerous. Look closely at the fine print of that agreement. There is a date stamped on the bottom, November 2026. This isn't a peace treaty. It is a ceasefire with an expiration date. And when that clock runs out, what comes next isn't just a return to the status quo. Experts and intelligence insiders are predicting a full-scale economic collision, unlike anything we have seen since the 1930s. Both sides are currently using this pause, not to de-escalate, but to reload. They are sharpening their deadliest economic weapons. The truce is a mirage, and the desert of reality is approaching fast. Today, we are going to peel back the layers of this fragile agreement. We are going to look at why November 2026 is the designated breaking point, look inside the arsenals of both Washington and Beijing, and explain why the next phase of this trade war won't just hit your stock portfolio. It will reshape the geopolitical map of the 21st century. The silence you hear right now, it's not peace, it's the deep breath before the plunge. To understand the gravity of what happens when this deal expires, we first need to define the battlefield. We are not talking about soybeans or cheap plastic toys anymore. We are talking about the periodic table of elements, specifically the industrial blood of the modern era, rare earth elements. For decades, the West slept while China strategically consolidated control over this sector. Let's look at the data, which is frankly terrifying. As of early 2026, despite efforts to diversify, China still controls approximately 85% of the world's rare earth processing capacity. Note the word processing. We can dig the dirt up in California or Australia, but to turn that dirt into the magnetic metals needed for an F-35 fighter jet, an MRI machine, or the EV in your driveway, it almost certainly has to go through China. They have the chemistry, the patents, and the pollution tolerance that the West outsourced years ago. When Beijing restricted gallium and germanium exports back in 2023, it was a warning shot. These metals are essential for high-speed chips and radar systems. The suspension of those restrictions in this current 2026 truce is the only reason our defense contractors are breathing easy right now. But this leverage is China's nuclear option. They know that without these refined minerals, the US transition to green energy hits a brick wall. The assembly lines for wind turbines freeze. The guidance systems for missiles cannot be built. It creates a palpable sense of suffocation. You might be asking, how did we let it get this bad? The answer is simple: efficiency. We chose cheaper goods over strategic security. And now, the bill is coming due in November. The monopoly is not just about market share. It is about the ability to turn off the lights in the global industrial machine at a whim. That is the gun pointed at America's head. However, history offers us a fascinating mirror, and perhaps a glimmer of hope. This is not the first time a dominant power has tried to weaponize a resource, and it won't be the last. But there is a phenomenon in economic warfare known as the boomerang effect. Let's look at the historical precedent. Go back to 2010. A Chinese fishing trawler collided with Japanese Coast Guard vessels. Tensions flared. China responded by unofficially blocking rare earth exports to Japan. At the time, Japan was terrified. But what actually happened? Did Japan collapse? No, the shock forced Japan to innovate. They poured billions into research. They found ways to make motors without dysprosium. They invested in Australian mines like Lynas. Within a decade, Japan's dependence on Chinese rare earths dropped from over 90% to under 60%. The embargo failed strategically because it destroyed China's reputation as a reliable supplier and accelerated the creation of alternative supply chains. We see this pattern repeating. When the US banned high-end AI chips to China in the early 2020s, it didn't stop China's AI development. It forced Huawei and SMIC to burn cash and talent to achieve breakthroughs, like the Mate 60 Pro and subsequent 5nm domestic chips. The lesson here is counterintuitive. Sanctions often act as a subsidy for the opponent's innovation. They create a Sputnik moment. By weaponizing the supply chain, China is currently forcing the US and its allies to do what they lacked the political will to do for 30 years. Rebuild their own industrial base. The pain is real, but the result is a hardening of the target. Every time Beijing tightens the screw, they are inadvertently funding the mining projects in Nevada, the processing plants in Texas, and the recycling facilities in Europe. They are creating the very immunity that will eventually render their weapon useless. So, if history suggests that resource blackmail eventually fails, why is Beijing doubling down? To understand this, we have to look at the psychological and political calculus inside the Politburo. There are three key drivers here. First, there's the organization memory gap. The current leadership in Beijing is under immense domestic pressure. The economic slowdown of the mid-2020s, the real estate crisis, and youth unemployment have created a need for external victories. Standing up to the US is a powerful nationalist narrative. It is political theater intended for a domestic audience as much as an international one. Second, they believe the US is structurally weak. They look at our polarized politics, our debt ceiling fights, and they calculate that America cannot sustain the pain of a supply shock long enough to build alternatives. They are betting on our short attention span. Third, there is a fundamental misunderstanding of the Western alliance system. Beijing often views trade as bilateral, US versus China. But they underestimate how US pressure galvanizes allies. When China pushes, Japan, South Korea, the Netherlands, and Germany tend to align closer with Washington, not pull away. But in the short term, Beijing feels they have no choice. They view the US containment strategy, the small yard, high fence policy, as an existential threat to their rise. They believe they are being cornered, and a cornered power does not look at the 10-year historical trend. They grab the weapon that is closest to hand. In this case, that weapon is critical minerals. They are willing to burn their long-term market reliability for short-term leverage, because they feel the window of opportunity to surpass the US is closing. This desperation makes the November 2026 deadline incredibly volatile. Now, let's flip the board. If China has the raw materials, what does the United States have? We have the tools. And in the modern world, the tool maker is king. I want you to visualize a printer. You can have all the ink, the rare earths, and all the paper, the silicon wafers in the world. But if you don't have the printer itself and the software to run it, you have nothing. The US, along with its allies in the Netherlands and Japan, controls the printer. This is the semiconductor manufacturing equipment, SME, and the electronic design automation, IDEA software. This is America's invisible hand on China's throat. Companies like Cadence and Synapses control the software needed to design any advanced chip. You literally cannot design a modern processor without them. Then you have the equipment, the etching, deposition, and lithography machines from Applied Materials, Lam Research, and CLAL. These are the most complex machines ever built by humans. China has been trying to replicate this supply chain for a decade, but the gap is still massive. It's not just about stealing blueprints, it's about tacit knowledge. The thousands of engineering hours that go into calibrating a lens or mixing a chemical slurry. This is the choke point. While China can withhold the raw ingredients, the US can brick their ability to process those ingredients into anything intelligent. It's a symmetrical standoff, but the US leverage is higher up the value chain. If the trade truce collapses in November, the US is preparing to expand these controls to legacy chips, the older chips that go into cars and washing machines. This would be a devastating blow to China's manufacturing sector. It's the difference between cutting off the fuel, China's move, and seizing the engine, US's move. This brings us to the current state of play, a mutually assured economic destruction. It's a stalemate, but an unstable one. Picture a scale. On one side, China holds 85% of the processing for rare earths. On the other side, the US and its allies hold 90% of the advanced semiconductor equipment market. It is a perfect, terrifying symmetry. Both sides have their hands on the other's windpipe. The fragility of the current truce lies in this balance. The markets are calm because they assume rationality will prevail. But in game theory, this is known as a chicken game, two cars driving at each other. The first one to swerve loses face, the one who doesn't swerve risks a crash. The November 2026 deadline is the point of impact. Why November? It's not just an arbitrary date. It aligns with the US midterm election cycle and the ending of China's current 5-year plan review cycle. Both political systems will be demanding a show of strength. The danger is that one side believes their weapon is more potent than it actually is. China might overestimate the world's reliance on their gallium, ignoring the stockpiles the West has built up. The US might overestimate the effectiveness of export controls, ignoring China's smuggling networks and state-funded innovation. When two giants miscalculate their leverage simultaneously, that is when trade wars turn into trade depressions. We are no longer in a world of free trade. We are in a world of weaponized interdependence. Let's run a simulation. Let's look at a third-party example to understand the damage potential. Look at South Korea. In the past, when China retaliated against them over the THAAD missile system, Chinese tourism dried up, Lotus stores were closed, and the economy took a massive hit. Now imagine that on a global scale. If the deal collapses in November 2026, here is the sequence of events. First, China announces a total ban on the export of heavy rare earths. Within weeks, the spot price of dysprosium and terbium skyrockets 400%. Defense contractors like Raytheon and Lockheed Martin sound the alarm. Production of guidance systems slows. The EV market, already struggling with margins, faces a crisis as motor costs. Double Tesla, GM, and Ford stocks tumble. In retaliation, the US implements foreign direct product rule expansion, effectively banning any company in the world from selling chip, making tools to China if they use even a speck of US technology. China's fabs start to break down as spare parts run out. Their AI ambitions freeze. The global supply chain fractures. Inflation in the US spikes again because goods become scarcer. This isn't hypothetical. This is the war game scenario currently being run in the Pentagon and in Zhongnanhai. The economic shock would be worse than 2025 because the buffers are gone. The inventory that companies built up during the truce will be depleted. We are looking at a potential 2 to 3% contraction in global GDP. It is a scenario where everyone loses. But the question is, who breaks first? This is where the concept of deterrence comes in. In nuclear strategy, you have weapons so you never have to use them. The US strategy right now is economic deterrence. By showing China that we have the ability to completely decapitate their tech sector, we hope they won't pull the trigger on rare earths. It's a strategy of containment and calculated risk. The Biden-Trump, whoever administration has maintained a surprisingly consistent line. Keep the technological gap wide enough to maintain military superiority, but not so wide that it forces China into a kinetic war. It's a tightrope walk. The reason the US hasn't completely embargoed China yet is precisely because of this balance. We want them integrated enough to have something to lose. If we completely decouple, we lose our leverage. So, the strategy leading up to November 2026 is to build latent capacity. This means funding mines that aren't yet open, subsidizing fabs that aren't yet built, and strengthening alliances with nations like Vietnam, India, and Mexico. It's about signaling to Beijing, if you cut us off, it will hurt us for 2 years, but it will ruin you for 20. It is a poker game where the US is showing just enough of its hand to keep the other side from going all in. But is there a way out? Is there a deus ex machina that breaks this cycle? Yes, and it lies in technology and geography. While the politicians argue over existing mines, scientists are changing the equation. The ultimate solution to the rare earth monopoly isn't just opening more mines, it is rendering the monopoly obsolete. We are seeing massive breakthroughs in material science. Tesla has already announced moves towards rare, earth-free motors. We are seeing the rise of the blue economy, deep-sea mining. The Clarion-Clipperton Zone in the Pacific Ocean holds more manganese, nickel, and cobalt than all land-based reserves combined. While environmental concerns are real, the geopolitical pressure is pushing the West to unlock these resources. Furthermore, recycling technology is advancing. We throw away millions of tons of rare earths in our old phones and laptops. Urban mining is becoming a viable industry. If the US and Europe can solve the technical challenges of deep-sea extraction and circular recycling, China's 85% market share becomes irrelevant. This is the long-term optimism. Technology always tends to defeat resource monopolies eventually. The Stone Age didn't end because we ran out of stones. The Oil Age won't end because we run out of oil. And the Rare Earth Age will end because we invent our way out of it. The US innovation engine is slow to start, but once it gets going, it is unstoppable. So, let's tally the ledger. The fragile truce of 2026 buys us time. That is its only purpose. If it collapses in November, we will face severe short-term pain. Prices will rise. Electronics will be delayed. The stock market will be volatile. But looking at the macro-historical trend, the odds are stacked against Beijing. Resource blackmail is a wasting asset. Every day that passes, the West diversifies a little more. Every threat China makes accelerates the investment in alternatives. The US economy is dynamic. The Chinese economy is increasingly statist and rigid. History shows that in a long-term economic war, flexibility beats rigidity. The cost of this transition is the price of admission for a secure 21st century. We are paying the tuition now for the lessons we ignored in the 2000s. The China price was never cheap, the costs were just deferred. Now we are paying the principal and the interest. November 2026 will be a shock, yes, but it will also be the moment the West finally cuts the umbilical cord. What does this mean for you? It means the era of cheap, disposable electronics is ending. It means that if you are an investor, you should be looking at companies in the critical minerals space outside of China, companies in Australia, Canada, and the US. You should be looking at the tool makers, the recycling firms, and the defense contractors. But more importantly, it means we need to adjust our mindset. We have taken the stability of the global supply chain for granted. That luxury is gone. When you hold your smartphone, realize that it is a miracle of cooperation that is currently being held hostage. But also realize that the ingenuity that built that phone is capable of solving the supply problem. Technology is the ultimate resource, and that is a resource that cannot be embargoed, only delayed. So, here's the question for you. Do you think the US should strike first before November 2026, tightening the screws while we have the chance? Or should we extend the truce at all costs to buy more time for our mines to come online? Is the pain of a trade war worth the price of independence? Let me know your thoughts in the comments below. This is a conversation we need to have because the clock is ticking. November is coming. If you found this analysis valuable, make sure to like and subscribe for more deep dives into the economics behind the headlines. Stay skeptical, stay informed, and I'll see you in the next one.